Hey, good evening, everybody out there on social media land. I am Russell Liss, and welcome back to another stock market prediction video. Not so much handling predictions here as we are handling just sort of basic technical analysis of how things are traded. Um, Today was a fairly rough bludgeoning in the markets early into the day. My thesis from last night didn't entirely hold water. I thought we would go down and then never come back up for even a breath. I thought today was going to be really, really bad, and about halfway through the day, we caught a break, and there was a bit of a bull move up. As a matter of fact, there was two really good bounces in there. As far as if you're playing the long side, I did not play the long side today. I was short pretty much all of my positions. Uh, so we really kind of want to get a good idea as to like what we're walking into tomorrow. As of right now, the things that are really still it's still this sort of balance between the Fed tightening and the quantitative easing, and on the other side of it, the Omicron variant and how much that's going to affect the supply chain going forward. So really, those are the two major concerns of the market right now, and it seems to have killed our Santa Claus rally. As far as every year around about this time, we see stocks do a massive run up into Christmas and into the new year. Looking like we're probably not going to catch that before Christmas or any sort of real hurrah. However, I should make it clear, with the Fed coming in and tightening, and with the Omicron variant, and with something that happened earlier this month, which is called the tax loss harvesting, there is a lot of money sitting on the sidelines. This is a report that came in. We got it a while ago from about 2 weeks ago from Goldman Sachs, I believe, or Bank of America. I can't remember which one of them. And if inflation is a problem, we will definitely see a move of that money back into stocks or back into US dollars, one of the two. It is possible to see them run into bonds, but as of right now, the bond market is signaling that yields are still headed lower regardless. However, the amount of money that is in bonds right now is there for the purpose of just being protected as opposed to really trying to make any real money. One of the things I think that you should be very clear about and understand when you venture into the world of the stock market, there are two sides to the stock market. There are those of us out there trying to and presumably speaking, I'm a guy who's trying to get rich in the stock market, right? The other half of that coin is people who are wanting to stay rich, and the amount of dollars trying to stay rich are way higher than the number of dollars like mine trying to get rich. So I'm just trying to take advantage of some volatility. Some of these bigger anyway. So with that in mind, a lot of the movement we're seeing in the market is a lot of big money moving around looking for protection, not so much really trying to make a lot of money. Okay, in the markets as is. That being said, the reason they do this and they go through all the complication of all the markets and all the investments is because inflation rises at about 3% normally, somewhere between 2 and 3% normally per year, and now it is going it's above 6.8%, as we've discussed on our last two videos. The thing is inflation devalues your money. So if you are somebody who had, say, $1 billion, right? Let's say 100 million, just for easy figuring, right? At 6% interest, you technically just lost $6 million. Okay, or not 6% interest, 6% inflation. You lost $6 million. That just goes away. It doesn't go to anybody for any good. It's just gone. It takes that much more money to buy the things that you could buy. So what you typically try and do is, if interest is, say, at like a 3% interest rate, you try and find something that's paying at least a 5%, or inflation is at a 3%. You typically try and find something that's paying at a 5%, or greater than 3%, right? That way you're outpacing inflation. So a lot of the movement in the markets right now are people trying to find a place to put their very large sums of money so that they don't lose it to inflation. And unfortunately, right now, there's not a lot of really great places. However, 2022 rolls around and, it's new, bright, shiny year, and who knows what could actually happen. It could very well be, there's a lot of stuff that can happen in 2022. Now, I have, the Fed is still doing bond purchases, and so they're going to be doing that. And they can't, until they end those bond purchases and until they clear out their balance sheet a bit, they can't actually start raising interest rates, because they kind of be raising, I believe, would be raising interest rates on themselves. So that whole tapering of the bond market and things of that nature, or their bond purchases, isn't going to end until March, around March. And then mid-March sometime, we'll look to see if inflation, or if they raise rates. Now, here's the deal, okay? The narrative has been, up until about, the beginning of this month, inflation is what they call transitory. Basically, what they believe is supply chains are shut down and there's a labor shortage in America, so we can't get goods into America, okay? And that is pretty much causing now, because of that, right, we have less goods on our shelves, so the value of those goods is going up because of supply and demand. We now have less supply, we have more demand. Okay. What the idea is that as soon as that supply chain opens up, as soon as everybody goes, we return to full employment, that the cost of those goods will come down. And you can look to things like copper and lumber, and hell, the price of toilet paper, right? Like, it went up and now it's down. Gasoline is something that we're sort of keeping an eye on. Oil, although because of 2020, they have a little tighter restrictions. They have a lot tighter, more control over the supply of that. So oil's not exactly the right one, but we can look at some things and see the prices going up. And so, but we can look at some things and see where they already went up and they've come back down, right? Gold made a move down last week and then slightly move up, there's a few other ones that have done that. As far as what you need to be really thinking about or concerned about in the stock market is all of these little different things. One of the things that we got this morning was the price of soybean futures did rise by a whole dollar. So that's pretty much inflationary. I'm assuming that's because the cost of production through, first of all of our fertilizer is pretty much sitting on the Canadian border. So cost of fertilizer has gone up. What's the other one that's cost of fuel has gone up, cost of labor has gone up. So all the things around crops and food production have gone up. But also, again, because they're in short supply and in high demand. And so ultimately the belief is sort of that once things do get back up and rolling, that the supply will open up, we will have more supply, and those prices will come back down. The problem with this then becomes when we talk about the Omicron variant. And the thing is if the Omicron variant shuts those supply chains down even more or tightens those supply chains, it will be even longer. And we will still see this short supply driven, inflation coming. So with all of that being said, what are we to do? What's supposed to happen? And frankly, I can't say one way or the other. I don't think the US economy is going anywhere. I think we're always going to be here, and we're very wealthy, and I think that they're going to want to sell stuff to us. We have needs to buy things. Although be it, we probably will start being very much more selective about the things that we buy. So I doubt that the gas station tchotchkes will really stay a thing, but or hopefully not, especially because they end up in the landfills, and that's not green. And I guess we're green over here. Anyway, so that being said, the real question is so for us, we're not investors. We don't, most of this stuff doesn't really matter to us other than what we have as far as market sentiment. And right now there's a lot of fear in the market. There's a lot of risking off, meaning people are selling their stocks because they just want to be in a safe cash position, ready to either buy a bottom, or they want to be ready to, they just don't want to lose that cash in this pullback. So you have a lot of massive risking off in this situation. There is a fairly big likelihood of a market crash. One of the things that's very important to understand is that in 2020, when oil went negative and the market did have its crash for COVID, only about 2% of investors 1 to 2% of investors were selling through that crash. It was not very much. USO dumped a lot of oil and sold a lot. And so it was a very small number of people that caused a crash. I would imagine if it does crash, it will be a flash crash, and hopefully you all have put options. Again, on this channel, I'm not going to try and teach you here. If you want to learn something, please reach out to me on Facebook. You can get a hold of me through the Russell Journal, or find me, Russell Liss, on Facebook. And we will. I'm happy to have a conversation with that. I love talking about the stock market. So we will have a conversation just no matter what, whatever you guys, you want to learn. I'm happy to teach you. I will warn you that I am not an investor. I am a trader. Right now I focus on trading options. I day trade them. This is very risky. Most of you should probably not do this. However, if you're interested and you want to take a look, my girlfriend should have put a link somewhere in the description to Webull. If she hasn't, get a hold of me, or I'll put you in touch with her or something. We will get you a link to Webull, which is a broker that you can use to buy stocks and options with, if you are interested. So that being said, let's go to the charts and let's kind of get an idea of what they're going to do. I'm going to go ahead and switch over here. Okay, so right now what we're going to start with is I have a chart of SPY pulled up, and I've definitely really minimized a lot of. I've just knocked off a lot of the chart noise from the last couple of days, so it's a little bit more easy to understand. However, there's a few things that I should make clear to you that are out here. This little line on the bottom, this subchart, this is called the RSI. It is called the Relative Strength Indicator. I use it as a measure of, not a measure of strength in a move, but I measure it as immediate supply. How much supply is on the thing. Now, again, I'm not going to teach you a lot about this, other than typically what I understand is that the closer we are to this bottom dotted line, this over here, there's a 30 over here, the more supply of shares there are on the market. And the closer we are to the 70, the fewer of immediate supply of shares are on, tradable shares are on the market. Okay. This is not a representation of all shares. This is just based on a representation of over a given time period of what has been traded. This one, mine is set on, it's right now it's set on the 15. But Typically, I would set it on 20 days to 20 minutes, basically, what's been traded, and the volume of those shares that are either been sold or have been bought. And closer to the bottom, they are what has been sold and what is available for sale and what has been bought, which is kind of how I think about it. All right, the next few things that you need to understand is this dotted line over here. This is the 200 day exponential moving average. I'm not going to explain what exponential is. It's just basically an average of how the price is traded over the last 200 days. And the one above it is the 50-day exponential moving average. Okay. The next thing I want you to see here is when we look at the chart, each one of these little green or red marks on here is called a candle. And each one of these candles is represented. We are on the daily chart. So the time frame that this represents is a day. Okay. Now, the green candles, the price started at the bottom and it rose to the top. Okay. And closed out the day there. And the red candles, it started at the top and it came down to the bottom of the candle. Okay. Now, there's a lot more stuff I can teach you about candles that are very, very important. But as of right now, this video is starting to get too long anyway, and we still have quite a bit to actually get through before it's over. Okay, so a few things that you need to understand here. One, this line, here is the 50-day moving average on the daily. We want to see this line always above the dotted line, okay? If we want to see stocks keep going in the upward direction. Now, again, I don't personally care because I will play the moves down. I will play the moves up. I can make money buying, up or down. It doesn't matter to me. I focus on the technicals. What we should look for here is a couple of things, though. The very first thing we're looking for is an area of support, okay? This is an area where we have at least 3 touches of the line. And you can see we got 1, 2, 3, and over here 4. And we've got some strong support over here. And then the other thing that we look at is down here, these bars along the bottom. These are our volume profile line. This is how much volume has been into it. And you can see these candles where we're getting support, fairly big bits of volume coming into those. You can even see today, even though it's a small candle, we have a fairly significant amount of volume coming in to catch it at this point. Okay. Now, so this bold line on the bottom, this is our support. Now, what I have up here is a more smaller dotted line. This is resistance. This is a price that the price cannot break above. And you can see it comes up here. It gets in close several times. You probably even tighten it up around there, so it's a little more representative, and it really can't get above this price up here. All right. And that's overhead resistance. Okay. Now, the third thing you want to see over here is you see it runs up, it comes up, it breaks, it hits this, and it turns into resistance. Then it pulls back down, and it goes back up all the way to this new level of resistance back up here. Okay. Then you can see right here where it was resistant before. I'm going to put this box right there where it was resistant before. Look, right in that same area. Now our resistance became a support. And again, our resistance has become a support. I'm going to try and drag that up a little bit so you can see it. Okay. So we have these area where we had resistance is now acting as support. Okay. So there's a pretty chance that tomorrow will be somewhat of a bullish, if not flat day. We're going to go check a couple of the lower time frames in order to get a look at this. And then we're going to look at another stock that is going to correlate with this. Okay. So now that you understand a little bit about the chart, I can tell you what we're looking at. Now, this ticker is SPY. This ticker is an ETF. I don't have time to explain what that is, but basically it tracks the S&P 500. Okay. These are 500 of the largest companies in America, and they have a wide range of like what they do. Everything from Apple to Walmart. All right. So we're going to go look at a shorter time though. We're going to switch over here to the 1 minute, and you can see a few things. Again, looking good. We have the 50 above the 200. However, one of the things you want to see here is that we are very close. Okay, these two things are coming close to each other. And you can also see back here where price fell below. Okay, we also can look at the 1 minute and see where we had a similar sort of thing happen. Okay, this is overnight. We had that whole thing move up, and then we caught the gap down, caught this big move down. And then here we go. We're back up. It is very well possible that with these two being so close together, and you can see again, the one difference here is the 50 was below, or no, the 50 was coming above the 200. So they were getting pretty close to each other. And so there's a pretty good chance that this will also go down, right? So tomorrow when we're looking at the chart, we're not really looking to predict what will happen. What we want to see is whether or not this thick line is going to go below the dotted line, okay? And we want to look for indications whether or not that's possible or not. Okay, now the whole thing is the broader stock market, and we can look at this in the thing of the broader stock market. And where we're going to go to is we're going to look at the Russell 2K. We're going to look at the small cap stocks, or basically the smaller companies in the American stock market, okay? And you can see we had the exact same sort of thing. We had this run up. All of a sudden, we get this big move down, right? We get this selling into the morning. This was part of my thesis from yesterday. Did not expect this move up to here. And again, we're sort of doing the same thing. The 50-day is sitting there right above the 200. They're very close together. Okay. But one thing I want you to take a look at is now look at the difference between this chart and between what we saw on SPY. On the daily SPY, we've got a clear, distinct line going straight up. This one going straight up. This is the Russell 2K, ticker symbol IWM. And you can see the price is now below the 200, and the 200 is angled down. It is no longer angled up, right? You can also see that we have this flattening out through here where it's all through this. Okay, but there's a few things to notice. We are at one of those support lines yet again, and we have a strong representation of support, a lot of really big candles, a lot of really big volume profiles. So there's a potential to find some really good support tomorrow. I would not be surprised to see this come back up and try to make its way at least to the 200. I would say that more than likely, if we don't have enough volume to do that, the problem with it coming back up, right, is it's going to push the 200 up, but it's going to come up slowly. So it's going to drag the 50 down. And the danger that we have with trading is that they're going to pull this under this smaller average. They're going to pull it underneath the 200 almost by accident, trying to save it. They're going to do it. So what I'm going to be looking at, I'm going to be looking for a move to the upward side tomorrow for really the biggest gains. Really kind of looking to get back into that 217 range somewhere in there. Or the 218 range, one of those two. But with this headed down, it's probably not going to last very long. And there's a third thing that we can look at here to give us our sort of thesis. There's another thing that we clearly see on this, and I'm going to make this a arrow. I'm going to make it pretty thick. So you can see across these tops, as a matter of fact, you can probably go across all of these, all the way back up to here, and see that we've really been heading in this real long-term downtrend for a significant period of time. One of the things that's going to have to happen no matter what is it's going to have to come back up and break this. I will be looking for it to either come touch this and reject, and in which case I'll flip short, or I am looking for this to come up, break through this big thick arrow line I have here, and then I will go long. But until we have confirmation of either one of these moves, either a rejection of this arrow, a move above the 200, or the 50 coming below the 200. I'm not really confident in anything, and I can actually see this being fairly well flat. So not a lot of huge big prediction about this. And so not a big huge prediction about what's going to happen tomorrow. I don't think we're going to tank. One of the reasons is we're so low. The RSI is coming pretty close to oversold, and you can see the last time it got into oversold, it just ripped up there and caused this big spike. So as we get into this oversold area, I think that you're going to have some buyers. You're going to have some dip buyers. I mean, you're definitely below the 200. So, if you're looking for a buy zone, that's a fairly good guess if you don't take into consideration the market conditions. So, all right, guys, we can pull ahead and I don't think I need that chart anymore. All right, guys, this has been a long video. There's been a lot in here. Again, if you have any questions, if you really want to learn, get a hold of me on Facebook or get a hold of or click that link and get your Webull downloaded and get your broker some money in that. But yeah, as far as all that's concerned, I'm going to call that a wrap. So you guys have yourself a good night.